All right, welcome back to another episode of Asset Coach and Tax Strategist. We are in the middle of a series called Financial Distributors and just going through all this content, breaking down banks, investment companies, insurance companies. We broke down in our last episode what an accredited investor is and the foundation of understanding that to have access to some of these products and services that these financial distributors offer. Okay. And so today's episode, we're going to continue this process. Again, I told you I don't know how many episodes this series is going to be. I'm not putting a cap on it. I'm just going to pour into you, give you information, dive into it. You may be giving me some questions or comments that allow us to extend this to more. I don't know. We're just rolling with it. I'm excited to be here. I'm excited and blessed to be here, to be able to give you this. Now, please understand, we're not giving investment advice here, right? Where this is just education. We're just pouring into content, giving you an understanding of what's out there. These episodes we're on Google, or if you use another search browser or whatever, fine, whatever. But you're going to see the links in the episodes that we're using. This is all public information. That's the point. None of this is my content, my intellectual property. It's all out there, which is important to understand. To generate wealth, it's all public information. Plain and simple. It's what you do with it. Now, you may take this public information and create something that's unique to you and be the first time somebody is offered this. Awesome. Go for it, right? But here, we're trying to just understand what these financial distributors are, these products and services that are offered to you and I from banks, investment companies, and insurance companies to help us accumulate wealth, but also how do we reduce taxes? And so a lot of our other episodes that we talk about that, building wealth and reducing taxes, they're fraternal twins, right? You need them both. You need them both. You cannot build wealth without reducing taxes, and you can't reduce taxes if you have no wealth. You need them both. And yes, the adage of the wealthy get wealthier is true. It's true. If you've watched any of my content, you understand I use analogies. One of them I like to use is video games, right? I'm not a big gamer, but I understand the basics that if I'm level 1, I want to get to level 2. That's it. That's what I want to do. And when I get to level 2, then I'm going to go to level 3, but I cannot go 1 to 3, right? I just got to. So, Bob, how do I get from 1 to 2 and 2 to 3 and 3 to 4? Great. That's what we're trying to do here is give you that information, give you some of the clues, right? So in video games, you can find clues, and these clues you can earn a key to open up a treasure chest and get armor or gold or weapons or whatever you need to get to level 2 or the next level. Okay. That's all we're trying to do. There are breadcrumbs, there's hints all over the place, whether it's the tax code or the legal system or the investment, like Securities Exchange Commission that we talked about, accredited investor. There's clues everywhere. Shelves and shelves. If you remember the old bookstores, shelves and shelves and shelves of information. That's where I got all mine. I didn't just come out of my mom's womb saying, "Hey, I'm an asset coach and tax strategist." Mama, right? That was my first word. I had to learn all this stuff. Okay. But I took the steps to learn it. So I can go from level 1 to level 2 to level 3 and so on and so forth to whatever we're trying to do. I'm just trying to take that shelf, one of the shelves on the bookstore, take all that information and just jam it to you in a simple Cliff Notes version of a YouTube channel, right? Not everything I say is the holy grail or anything like that. None of this is my information. I use analogies. I may come up with an analogy to try to help understand information, but at the end of the day, the information's already out there, right? So that's the key. You need to make decisions to go get that information. So let's dive. We're going away from accredited investor. Now we're going to go talk about retail banking. What? We're on Investopedia. Why are we talking about retail banking? Start with the basics. Start with the basics. So, what is it? What's the different types? What are some common services? Bob, I know this. Great. Skip this episode. Or maybe watch this episode. Maybe there's something that's different. I don't know. Right? I don't know. But I didn't know all of that was involved in retail banking until I learned it. Just because I have a checking and savings account doesn't know I know retail banking. I got a checking and savings account. Now what? Right? So it's a consumer banking or personal banking is the other term for retail. So if there's retail, then yes, there is wholesale, right? There's a reason why they're using the word retail. And when you go to a retail store to buy products, clothing, you're paying a markup from the wholesalers. And that's how that retailer makes money. Same thing in banking. Well, how do I get into wholesale banking? Revert back to credit investor, revert back to learning about this information. Learn, get the clues to figure out to get to the next level. Okay. Now, banking, it provides financial services, financial distributor to individual consumers rather than businesses. Now, you can be a business and get retail banking, but you start going into hybrid banking. If you're a business owner, and depending on the level of business revenue you generate, determines the type of banking services you'll get as a business. Okay. So, but that's not fair. Well, they're in business to make money. You have no money. They're not in business for you. Plain and simple. That's how the world works. Get over it. This isn't shocking, right? So if you want the ability to have access to different levels, you need to make decisions to get to different levels. Plain and simple, right? Don't blame yourself or blame others. Just do it. So retail banking is a way for individual consumers to manage their money, have access to credit, and deposit their funds in a secure manner. Now, have access to credit. Okay. This is another terminology for debt, right? And on the personal side, the more you use, the more it affects your FICA score, right? And so that FICA score is important to understand that that you have access to, and how's that work and why does that work? And there's plenty of YouTubers out there that probably do a great job on understanding what a FICA score is or how to increase it. We're not going to give that information here. So that's not important to me than trying to give you that information. It's not my skill or expertise. Go Google, go on YouTube and find somebody that knows more about FICA scores and improving it. That's important to you. But that's all based on personal. And no matter how great your FICA score is, there are limitations to the amount of debt, to your income, to all this stuff personally. Okay. And really, I'm going to be honest with you. I think it's designed for the banking system. That's it. So they can justify higher fees. Oh, you got a lower score, so we got to charge you higher. How do they grade you based on them being able to charge you more? The lawyers wouldn't allow that. Oh no, you can't do that. You can't charge these people more money. So they come out with a scoring system that says, oh, look at your score. So your cost is higher. You're a higher risk if I give you these services. You're a higher risk. And with higher risk comes more cost. It's a business. Okay. They're not there as your friend. Oh, but my baker's so nice. Of course they're nice. It's a business like any other business. When you go to the retail store to buy clothes and you see the same person that comes to help you, of course they're nice. Go buy a car. Of course they're nice. Go get a realtor to buy a house. Of course they're nice. Talk to us. Of course we're nice. Right? We're trying to all build relationships to generate revenue. right? I shouldn't have to go into that. So I'm not going to. That's obvious. I just bring it up because I hear this all the time and it's like, my goodness, you're a grown adult. You're in your 30s and 40s. Why is this new to you? But anyways, deposit their funds in a secure manner. Now, when they say secure manner, what they're saying is based on the bank and the Federal Deposit Insurance Corporation, FDIC. Okay, up to a certain dollar amount. Okay, that's what they mean by secured. But if you need your money and it's over a large amount, so if you say, hey, I want to cash out my $300,000, they don't have $300,000 sitting in cash at the bank. You're going to have to make an appointment so they can order $300,000 from corporate or wherever the $300,000 is to give it to you. Okay. So maybe that's secured. Well, I don't know. We won't go into my rabbit hole of what I feel like that means. But if there's a run on the bank, sorry, no more money. Well, hang on. My money's in your bank. Why don't you have it? Because it's not sitting in a vault. Right? Bob Wolf's cash is not stacked up sitting in a corner just in case Bob Wolf wants that. It's not how it works. It may used to have before computers, but today that's not how it works. Not at all. So secure manner, they say secure based on their rules and guidelines, not necessarily how we would possibly agree with that. Okay? That's okay. All right. I mean, how often do you need your $300,000 account closed up or cashed out? Right. So, I mean, if it, fine, I'll make an appointment next week. You'll have, okay, great. Same thing if you want to get currency for Europe. When we went to Europe, couldn't just show up to our bank and get euros. We had to order it. We want 250 American dollars of euros, whatever that is. And it got mailed to us. Done. We didn't have to even go into the bank. So, services offered by retail banks include checking and savings accounts, which is normal, right? Mortgages, which is debt, personal loans, debt, credit cards, debt, and certificates of deposits, asset. Now, checking and savings and certificates of deposit, CDs, create liquidity in a bank. And that liquidity allows them to lend those funds out as well as receiving funds from the government or the Federal Reserve in the loaning and that such. So they can lend out mortgages, personal loans, and credit cards, auto loans, and get interest on that and make money based on your FICA score. Okay. So when you talk to or see people or like Dave Ramsey or Susie Orman, they talk about be debt free. This is what they're talking about. Have no personal debt. Eliminate this as much as you can because it's going to cost you more money over a period of time. Now, here's where I disagree is that if you're utilizing debt in a manner to create leverage, not consuming, but leverage to create an asset, to create cash flow and wealth, then you need to understand why that is. Okay. And so that's an important aspect of it. So a key takeaway is retail banking provides financial services to individuals rather than large institutions. Retail banking. Okay. All right. So how's it work? Let's go down here. And again, you can go through all this stuff on your own. We'll have the link down below. But you can see all this stuff for how retail banks generate income. Okay. A retail bank stores the cash deposits of its retail clients and then uses these deposits to make loans to other clients. The Federal Reserve formerly required that all banks keep 10%, but now it's 0. Didn't we just talk about this in financial distributors? This is where the information comes from. This isn't shocking. Board of Governors, let's click on this. Right here. Reserve system. Let's click on this and see what comes up. Oh my goodness. This is what was on my PowerPoint. Okay. Here we go. It's what I'm talking about. It's all public information. It's all public information. Okay. It's all these crumbs are sitting there. They're all sitting there. Every single crumb is sitting there. Okay. This is also known as the reserve requirement. It's seen as giving safety and liquidity measures. So now, if you know that the reserve requirement is zero, then there's not a lot of safety or liquidity, which is again why I said in a previous episode, if you put money into a short-term CD like 90 days, they're going to give you a higher rate of return because you're creating their liquidity. Your deposit's creating their liquidity. They're not creating liquidity. You're doing it. They're passing that liquidity on to you, meaning they're passing that risk on to you. Okay. And giving you a little extra interest for that. The banks charge interest on these loans at a higher rate than they pay on consumer deposit, which is how banks earn income, right? This isn't shocking, right? This shouldn't be shocking. This is normal. But consumers rely on the Federal Deposit Insurance Corporation, FDIC, to insure their deposits. As of March 31st, 2023, there are 4,600 institutions, commercial banks, and savings banks that are under FDIC. Insured was $23.72 trillion amount of loans and leases. Insured was 12 million. Okay. So there's 23 trillion, 12 trillion in insurance. So about half. Okay. And if you want to know what this is, you click here, and it'll pop right up. There you go. Okay. Everything's public information. Everything's public information. Very, very important. Okay. All right. So types of retail banks, we don't need to go into that. You know what a retail bank is, right? You know who they are. Credit unions are part of the retail banking, but they just treat their clients differently. They have same products and services, but they price it differently based on the members of that particular credit union. It's a union, a pooling to create credit, right? Credit unions, expanded services. A lot of these banks dive into now local financial representatives, which dive into investment companies and some of these other investment areas that we'll talk about. Okay. Let's see here. What's the difference between retail versus corporate? Now, the general retail is a general, but corporate only offers to companies and corporate bodies. The scope of products and services available also are different. Yes, you have normal banking products for the owners, but there's the corporate banking is business oriented. So lines of credit. For example, you can get loans and credit for other products. You have different treasury or cash equivalent as cash safety equipment lending. So if you need to buy equipment, they have different ways of getting equipment, not a mortgage, but you're buying equipment. And the reason why they do that is because usually equipment helps you generate revenue, creates profit. The banks earn interest on that. Commercial real estate, trade finance, and other employer services. Okay. So very, very important information here. It's a good foundation of understanding the basics of the banking system. If you're one of our members, you're more likely a accredited investor. You are more likely are a business owner as well. So there's a whole world to you that we're going to dive into here from an outside 30,000 level viewpoint, give you high level. But then if you're a member, we're going to dive into the weeds, right? We're not even just going to dive into the weeds. We're going to dive into the soil and the roots, and we'll probably go about 6 feet below that. Okay. So this is literally just from a high level perspective, give you some information, some education, where to do some research, and try to understand some of the basics of what's out there. Okay. So thanks so much for joining us. If you haven't subscribed, go ahead and subscribe. Give us a thumbs up, add some comments, and give us some questions so we know how to drive some of our content and help you out as well. So we don't have to try to make this stuff up and figure out what you want to know. Just tell us, what do you want to know? And we'll make every effort to help you out there. Thanks so much. My name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants. I'm an asset coach and tax strategist. Make it a great day.